Hi, everybody. It's Fade the Fed Day. Big day in the markets. We're having this dollar bounce. We got the rally in the end off the 3 drive. Could be another push into the Fed. Euro's under pressure. I'd like to see him take the euro down towards 108, 107.90. So if the dollar rallies, I'm looking for that to be a selling opportunity in the dollar, buying opportunity in the euro, shorting opportunity in US dollar yen, and potentially Canada. So we have a big day. I have a couple of interviews today. Here's my euro chart. Daniel Hussey from at Elliott Wave Forecast is going to be with us in the first hour in the next 10-15 minutes. Then I have Lane Mendelsohn from tradertech.com. He's going to show us his company's software. And then later on, we have the Fed that will be covering live with Mauricio and Val and me. And that'll be in about 4.5 hours. So who's in the house today? You know, I really recommend you cleaning up your books and getting flat. It is live. Can you guys see? Can you hear me? Refresh. Refresh the page. You can hear me. So Mauricio, a few are saying they're not getting the live feed for some reason. Give me a Y if you could hear me. Sinatra, Tolson, Malcolm, Fade, Ryan Gandalf, nice to meet you. Ed Z, Robert Roop, you're a new handle, nice to meet you. They're getting Yohei's wrap up. You can hear me? All right, Alien, how are you? So I think it's a Fade the Fed day. We got the rally, pretty good rally in the yen off the 3 drive here. Maybe there's one more push left in the yen. Maybe they could take the euro down towards 107.90 to 7.5. And maybe we'll get one more shot up. We're about to make new highs in the Canadian. 3rd drive line in Canada is coming in during this session at 38.5. 38.5, another 80 pips up for Canada. Hello, Khalid, Jax, Abel, Shorty, Tolson, Ryan Gandalf, welcome to LAR. Hello, Carlos. So I'm looking to fade the S&P rally here. I'm going to put a half position on before the Fed, the other half after the Fed, and looking not for new highs in the S&Ps. If they blow to new highs, I'm wrong. So I'm taking a shot there. The Dixie still could have some more upside. Here's your Dixie chart. I thought we might get up to 99 in the Dixie. There's your S&P. S&P headed towards its 2060 level. And here's your dollar. Yeah, dollar's hardly doing anything. So we could have a dollar rally back to about 99, 99 and a quarter. Hello, Alexandros. How are you, buddy? Everyone doing okay? You better not cry. That could be too. So you're a seller at 111? You better not cry. You better not pout. I know when you're in and I know when you've been stopped out. Dale Claus is coming to town. I know you're over leveraged. I know you're averaging out. So if you blow your equity, don't you cry and pout. So you better not cry, you better not pout. I know when you're in and I know when you've been stopped out. Dale Claus is coming to town. Yeah, very good call, Alexandros. Okay. Nice to meet you, Sonny BTC. So we have some new handles in here. Hi, Sinatra. Everyone welcome Sonny to our community. Sonny. Good song, Sonny. Welcome, Sonny. Welcome, Ryan. Tosin's back. Abel's here. Khalid's here. Sinatra's here. Ron the Duchess here. Goldie, long time. Welcome back, Goldie. How have you been, buddy? Shorty's back here today. Robert Roop. Welcome, Robert. Yeah, you could post your link if you want to, Alien, on your blog. Welcome, Robert. So how about a large welcome for all the new handles? Doug's here, JM. Nice to meet you. Nice to meet you. So what we do in here is we share our ideas like this, just like what Alien's doing. Alien showing, is this the Aussie? Aussie yen. Okay. I think maybe we get the pop first. Yeah. Thank you, Alien. Maybe. Everyone thank Alien for his daily Aussie yen look and possible pathway it's going to take after the Fed. So I'm going to be interviewing Daniel Hussey at Elliott Wave Forecast. Mauricio, I Skyped you with a Gmail address. Yes, we do this every day. We do this every day from 9 a.m. to 11 a.m. Stand by. Stand by for Daniel Hussey. First guest should be with us shortly. Stand by. Yes, every day, 9 a.m. Eastern to 11 a.m. Eastern, plus there's great programming, Yohei Elam, Pryor, Tip TV, etc., etc. So just waiting for Daniel to arrive now. Everyone doing okay? How are you, Goldie? You get the song out of your head? You get that song out of your head? Hello. Okay, good, Zig. So, Ziggy, being Santa Claus has completed my conversion to Christianity. Thank you for making me Santa this year. So, our resident philosopher, Ziggy is in the house. One of the pioneers of LAR. Okay. So we're going to go ahead and talk to Daniel now. Hi, Daniel. How are you? Can you hear me? Waiting to hear you, see you.
All right. Can you hear me?
Hear you now, Daniel.
Awesome.
Welcome to LAR. Welcome back to LAR, in fact, Daniel.
Yeah, I feel like it's been almost a year, actually.
I don't know if it's been that
No, it hasn't
long,
been
but
that long. We were talking euros above or below 109, 108 last time I think I talked to you.
Okay. Well, what a great day to have you, which kind of contrasts what you do compared to what a lot of other people do. I know that Eric, really doesn't care about red events. His trade is on regardless of it. And I know your discipline as an E-waiver. So how does an E-waiver, who really is a technician, that price action, wave counts, etc., are everything to them, approach what could be an event that hasn't happened in 9-10 years?
Well, I think like anything, one step at a time, because this is definitely, well, whether or not the Fed hikes rates today, which it's anybody's guess, right? I have been of the ballpark, though, personally, that I feel like we are going to see a rate hike today. I may be the only person in the room or in the world thinking that, but it's the only reason I have been saying that or thinking that is because of kind of this 3-year linear projection we've gotten.
Okay. I just want to ask you, Daniel, do you have a camera so we could see you instead of an icon?
I don't have a camera, unfortunately.
Okay. All right, then why don't we go to a screen share instead of looking at? Yeah.
Absolutely.
So now, you haven't shaved for a month. You haven't shaved for a month. That's why you're not on camera. Yeah, I do that. I look pretty rough sometimes on screen. So I'm seeing a blank screen up on the left-hand corner, though. Is looks like the guppy.
All right. Can you see the screen now? Is everything?
We've got it.
Cool. All right. Well, here's a lot of our Elliott wave and a lot of the trading stuff we've been doing. But how do we approach a day like today? Cautiously, like anyone else, because it's definitely not. While yes, we like to stick to the mantra of that. News just creates noise. It just creates otherwise an event, right? It doesn't give you sometimes the meat of your trade, or at least we don't believe so. We believe technicals and fundamentals, things will work themselves out around the whipsaws that news creates. But on a day like today, we don't totally ignore rate decisions. Rate decisions is that 800-pound gorilla, in the FX world. It may be the one piece of news that directly and fundamentally changes the game for a currency. And so a lot though for a lot of what we see, and I can go back to a chart of the dollar yen. Great example. I was looking at this morning. This is just a daily chart of the dollar yen.
Yeah.
You can see way down here at the lows, all-time lows down here back in the early 2000 teens, to where we are today, sitting at the 121, 80-ish area. And I put on the chart here these little gray boxes, which all they are is the two last major Fed meetings, the 2 December Fed meetings here, where the Fed actually tapered.
So that's a taper there.
Yeah,
What's
so
the
these
one
are
in
the
14?
two moments when they tapered was in their last 2 December meetings. And so I've been of a camp that over the last year I've just thought, hey, maybe it'll be December this year. Who knows?
Yeah.
So it's just a linear projection of when I saw, of when we've seen them act, right? We're not talking about just when they get together and they vote and they say this, that, or the other. This is where the Fed has actually taken action. And in this case, it was removing half of the taper. I'm sorry, in the prior 2 December meetings, right back in
You know, it's
2014.
interesting that you
Before
use boxes to represent this because many journalists are saying the Fed is in a box or the Fed is in a corner, has painted itself into the corner.
Yeah, and
So,
you
go
like
ahead.
to hope that it's not the same corner that the Bank of Japan has painted itself into.
Great point.
Which is, I think you're looking at two very different sides of the same type of coin, though. And that coin is that fiat currency controlled by a central bank that ultimately allows the central bank more flexibility. That's something that Europe doesn't get unfortunately for Europe and the EU and the euro itself, they don't have that ability to kind of open up the quantitative easing floodgates and control their currency to the same effect that Bank of Japan, the U.S., even Australia could if they wanted to.
And why
Because
is that? Because they don't have a fiscal union, only a monetary union?
exactly, that's precisely
Okay.
it. So you don't have one entity that both effectively controls your currency, your banking sector, and the monetary policies that a government would otherwise set forth into place. So you've got, we all know Europe, broken up into many different nations, and they each have their own little way of going about things. It's worked out for some, like like Germany, and others have fallen behind, like Greece. And so that has caused, I don't want to call it animosity, in the bond markets, but it is. You can't. The Fed had the ability to basically just start printing money, call it quantitative easing, and hand it out to the banks in forms of effectively a bailout. Whereas in Europe, when Greece wants that bailout money, they've got to come to that discount window and borrow it, just like at whatever rate Germany effectively wants to lend it to them, right? And so um, the opposite side of the coin from that is then what Bank of Japan's doing, which is kind of a quantitative ease to infinity here, trying to entice inflation so that they can reduce that debt to GDP ratio by putting as much yen out in the market as you can. And over the last 2-3 years, this has created somewhat of a perfect storm in like the dollar yen cross, right? You had this
Okay, so
fundamental,
that's pretty historical. Haven't we had a
absolutely.
shift in tone from the BOJ in the last few weeks?
Yeah, I'd have to say that's something you can't ignore. But one thing again, going back to now all of our yen crosses, one thing that in the short term here, which maybe we'll talk about a little bit, is that the other yen crosses may not be doing the same thing the dollar yen's doing at this time either. And so there's definitely a cross current going on in the FX community and in the markets right now that it's kind of been the dollar, then your commodity currencies, and then some of your European currencies all clustering, moving together. And these subsets have been really driving forces over the last few weeks, and culminating all to what could be this afternoon. Who knows? We'll see. So it's an exciting day, and there's definitely a historic day, like you were saying. So.
Well, what I do is I might have my toe in the water pre-event, but
Yeah.
what I'm doing is I'm looking at levels instead of
Okay.
trying to play roulette and bet on the reaction. I'm prepared with my levels should the market reach them, attain them, so that I'm not analyzing on the fly, that I'm executing when the market
Absolutely.
gets there.
Absolutely.
So do you do that too?
I do, and like we can take a look at the euro here. I'm not hell bent on selling into this 111, just a 50 back short, right?
Yeah.
It's a level, but it's so close that it's one of those levels that a day like today, it might be too close for comfort. Um, and so I like to personally be in trades and well into events like this, have stops trailed or in free trades because I don't necessarily trail stop as much as I take half of my position off to
Mhm.
reduce my risk. Because I feel like with trailing stops, the market just knows where you put the stop and it just comes right back and hunts you. So, um, with that being said, on a day like today, I definitely am out there taking a look at the levels, looking, oh, where, let's say, look at gold. Gold's been a pretty bearish market as of late. Definitely got cross currents going on um, with not only what I think is going on in economic sectors that might be slowing down, as well as generally just a squeeze on gold over the last 3 years. Um, but it's been in a very clear downtrend. And one of those levels today is I see no reason, and I'm not calling for gold to rally up to the 1120 area. But if it does, that's something to think about because that is one of those levels that I'm looking into, and I would want to be seeing if we get that rally up, a reaction off of it. Um, and that's really all we have in trading, right? It's a lot of those, we create those what if scenarios and then the contingency plan of how we execute it uh, based on what we see. Um, so that we're not just haphazardly going out and firing off trades wherever we see fit or think that there might be an opportunity for us, right?
Yes.
Um, so yeah, a good example could be gold because I can make a very good case. I've seen 50 handle moves in gold on Fed announcements. Um, that is a reality of something that could happen, right? And so that's always where my brain is on a day like today. Absolutely. Plan the trade, right, and then trade the plan.
Okay. So
Yeah.
your view on if there is a dollar rally, do you have the view that depending upon the magnitude that the dollar is a sell? We could probably go back to the ECB meeting, and the question is this an interruption or in trend, and we might be shifting back towards larger correction in the dollar, or was that just a blip on Draghi and the dollar's headed for new highs? There still is an awful lot of dollar bullishness. And when you talk about
Absolutely.
interest rates being maybe the one fundamental event that you need to pay attention to as an FX trader, don't you think this divergence in monetary policy between the ECB being in an easing mode and potentially us being in a tightening mode is so well known and possibly already factored into the market because people have been talking about this monetary divergence for months now?
Sure. Um, yeah, I definitely think I don't know if it's totally factored in or not, right? But what we do know is we clearly saw the euro price in a decline well into this year. And this year, for the most part, has been pretty much nowhere. Um, we're more or less in a range between 105s and 117s here in the euro, and we're
Yeah,
almost right about the middle of that range, which always makes this, a little dangerous for me as a trader. That doesn't mean though that you can't get free and there isn't opportunities to take stabs at one side or the other. But
right.
um, while the fundamental outlook for something like the euro right now is still definitely bearish, I can't ignore that over the last year we've just gone sideways, which maybe is today something that starts us off, right? Is today a reason to take us out of these ranges that the dollar has kind of found itself in? And both the dollar yen and the euro are seeing the same dynamic. It's not as perfect in the dollar yen, but for the better part of a year here, we've been sideways. And in fact, we're pretty much completely sideways and at the exact same price trading today that we were back in December of last year. So literally going back in time to last year's Fed meeting, we've pretty much gone nowhere in both the dollar yen, and same might be able to be said for the euro here. Is that
Just one observation with the Dixie making new highs at that par 55 level or retesting recent highs. A couple of currencies that come to mind for me is the yen hasn't made a new high during that time period, with the dollar making successive new highs, and the Aussie has not made a new low with the
also
dollar
finding
index
itself a
making
little
new
range bound here in the near term. But absolutely.
Is that a tell to you? Is that a market tell to you at all? That U.S. dollar, I know you're a waiver, it's kind of like a correlation view.
Well, I'm
why
actually,
isn't the yen, why wasn't the
personally, I'm
yen
more of a technical
125? Okay, go ahead.
But anyway, is it a telltale sign? No, but is it a hint at something? Absolutely. Something like the Aussie U.S. dollar, also a bit sideways here in a lackluster kind of range. We see lots of levels on both sides getting reactions here, and there's a clear fight going on between longs and shorts, bulls and bears. But when you do step back to that slightly bigger picture, just like the euro, the Aussie was in a very clear decline down into these levels. And so while this definitely could all be part of a bottoming process, it's the fact that over the last 3 months, when I think there could have been that opportunity for that short squeeze, it hasn't happened. It's a little, well, lost it there, a little difficult to say. And I also don't like how much the Aussie has diverged from gold. Gold pressing into new lows, wanting to make those new lows, continuing its clear downtrend, and the Aussie has now tried to find support, and maybe even will find support here into the 71, this 71 handle here in the short term.
Yeah, so actually even against gold, Aussie's showing relative strength.
Yes, it is. It's diverging a bit from what has otherwise been a pretty solid correlation over the last 5-10 years or so, and historically should remain correlated. So we'll see.
Okay.
It's definitely not going to be the faint of heart today.
Okay, so let me ask you this, Daniel.
Sure.
What do you think is going to be the biggest surprise in 2016 in the FX arena?
Outside of where I see the potential for the U.S. dollar to go, if the Fed really does start to ramp up the tightening. Just put in perspective where the U.S. dollar is now relative to all the currencies, relative to where we were at the height of the recession, at the height of quantitative easing, when everyone was talking about how dead the dollar is, and how completely opposite of a picture you have today. You have an incredibly strong dollar that almost across the board has strengthened and is holding on to that strength.
So I guess the big question is
that there's a dollar short over the last 5 years that is unwinding, that was so big, that had everyone so bearish for so long coming out of 2008 into the quantitative easings of 2010 and 11 and 12, that's just now starting to unwind. And you know where that could take us. Does it mean in the short term there could be that short covering in the US dollar, that there's a little bit of dollar weakness in the near term and that's a move to fade? Absolutely. But
okay,
I definitely think
I know
dollar's
that
going to be at the
Eric
forefront
says
of
everything in the
2016.
FX markets is corrective. Okay,
I'm sorry?
almost everything, because it's a war between central banks.
Yes, and on a long time frame, if you step out far enough, you can find that most currencies really are just in big ranges. and
Okay.
it's corrective in both directions. Absolutely.
So, when's the U.S. going to start winning the currency war? Recently, the Chinese have entered it with depreciation of the yuan. Can the U.S. mount some type of attack? Because Yellen, on a few occasions, has mentioned dollar strength and what it's doing to emerging markets,
Sure.
etc.
And this is where I think, at least this is where I have taken a step back and looked at, okay, what are some other situations where we've had otherwise multi-decade single directional trades and carry trades at that have gone on in the FX community, and we have one of them staring us in the face, and it's the dollar yen. Until 2012, 2011, you could have almost drawn a straight line from the 1970s highs of the yen to the lows and followed a very good, nice downtrend for a 30-40 year period. That 30-40 year period was precursed to the post-World War II economy of Japan, pegging their currency to the US dollar, running a surplus against the US dollar deficit, and keeping the yen artificially strong relative to the US dollar for 25, 30 years coming out of World War II. Which during that period also saw an incredible growth in the Japanese economy. You had the roaring Nikkei into the 80s, and I wasn't alive then, but Japan was, and the bond market was at the forefront. And in the late 70s, the early 80s, the currency was allowed to float again. And you saw an unwinding of what was a 30 or 40 year price appreciation occur. And if the same type of dynamic gets played with China, you could effectively see the same type of 30 or 40 year unwind occur, so long as it doesn't happen dramatically and they don't just let it go in one false swoop and you get that big black swan kind of, what would otherwise be a very extremely turbulent move for the market, right? Because I think we can all agree
like
that
the S&P did.
Well, yeah, I mean, in today's market, I definitely wouldn't. That's the thing. That's the scary thing of the times we're living in with algorithmic and computerized trading. Things can happen so fast, and the market that can digest information faster than it ever could. That I don't ever want to ignore that. Yeah, big moves like that can happen, but I'm talking the type of moves that would be catastrophic. The types that like you saw out of the Swiss franc earlier this year, or the Russian ruble, or the Brazilian real. That's where some of the biggest currency moves this year have been, and they have not been. They've been in some of the exotics, which is also kind of interesting to note. That it's been the emerging markets that have gotten crushed through all of this, and then you've got China. China's kind of this. Oh, what would you call it? They're like the trump card, I think, in the whole, because they're not really an emerging market. They've already emerged, but they're still treating their currency like it's an emerging market, and they're not. But then again, over the last month, I think we've also seen maybe a change in guard and a change in tone out of China. So it'll be interesting. Maybe we'll be talking this time next year and talking about trading the yuan. That's a very real possibility. And I would actually welcome it, because the more the market is allowed to breathe and continue to create its own driving forces without that government subsidy, whether it is China pegging their currency, or the Bank of Japan injecting yen, or the U.S. quantitative easing, etc. The more the free market can do on its own, the better. And so I kind of do invite the Chinese to let their rate float, and I would suspect that we would see a very similar single-sided Chinese yuan appreciation like we saw with the yen from the 70s through these lows, and that's part of the major trade in the yen that I've seen reverse over the last 5 years. And these big moves by the central banks, they are 100% the driving forces here. The dollar yen bottomed out because the Bank of Japan came in and said, nope, we're going to quantitative ease to infinity, It continued to rally because the U.S. began to taper, and we have, our third kind of action potential day in 3 years, and we'll see what they do. Because if
Okay,
they don't come
Daniel.
out with a rate hike, and what about that situation, right? Could there be short-term U.S. dollar weakness? And absolutely, from an Elliott Wave perspective, the dollar yen could pull back to 100 if it wanted to. Not in an instant, but that's a huge decline. And it's not
Okay.
something to completely ignore, right?
I'm not
What would that
ignoring it.
mean for our other U.S. dollar crosses, like the euro? Could we see rallies? Could we see the U.S. dollar weaken a little bit? Because at the end of the day, the U.S. dollar is definitely one of the stronger currencies on the street, if not the strongest right now. And then you've got on the other side of the spectrum things like the pound. The pound's been just systemically weak over the last several weeks. It's like every rally, this thing just can't get it up. It just every rally it falls back down. Pound yen's the same way. Pound US dollar, pound Aussie. And that's some of where the cross currents I think of actually today in my live trading we were talking about was how maybe on days like today you stay away from the US dollar, you let it absorb whatever's going to happen, and you make a decision, based on your levels, and you find other cross currents like the pound Aussie. That if we see the pound as one of the weakest currencies, I mean, we can see the downtrend in the shorts in the pound yen, the pound US dollar, even the FTSE. We're actually in a short in the FTSE currently, and would look to sell a little bit more on a rally here. It's just across the board we're seeing that. So let's not lock ourselves just into the US dollar today, right? Even though that's going to be at the forefront. Maybe we can make some money and potentially get trade setups in a cross current, right? It isn't in the direct line of fire of the FOMC announcement. And one of those trades I do like is a pound Aussie.
You want to show the chart?
Yeah. So I've got two levels up here. We sold a next in the series already. We're already short the 210 handle here, but it tested right up into its extreme. Nevertheless, I do like if we can create more of a three-wave dynamic here and pull back and then rally back up into this 21 or the 213.60 area. All it is a 50% retracement from the 224 highs on August 24th to the lows after, which if you notice, this August 24th high, that's the same day, this spike high in the pound Aussie is the same day we had a spike down in the S&P, a spike down in the dollar yen. That was the day that the dollar yen traded from like 121 area down to the 116 low and got a reaction. That's August 24th. So
yeah, that was the flash crash.
We can definitely get that was at oh, that's right. I forgot the S&Ps went limit down this year. I forgot about that.
They opened there. Yeah.
They opened there. I forgot about it.
I didn't.
Yeah, and it's
I was long the VIX, so I'll remember that day for a long time.
And I was staring at the dollar yen, and I had bought 118s, and I remember the thing sinking like 190 pips against me in that instant. And I'm like, oh, you got to be kidding me. Only for it to snap right back and get us free later that day into 120. So it came really close, but we're actually buyers in the dollar yen down into that 118 area.
Yeah.
It came
I want to thank you for your time today, Daniel.
No problem. No problem. Hopefully we can do it again. And
good hunting today. And
yeah, you too.
Wish you a Merry Christmas and Happy New Year, and may pips rain down on you and everyone that you mentor at Elliott Wave Forecast.
Thank you, Dale.
You're very welcome, buddy.
All right. Have a good one, everybody. And we'll see you all next time. And it's price
everyone, thank you. Thank Daniel. You can follow Daniel at Daniel Hussey Jr. on Twitter, at Elliott Wave Forecast. If you'd like to work with Daniel, they have a great team with Eric and Dowd and Hendrick, who's been here. And in fact, they're offering 40% off for one day right here, guys. Here's the link. It's for one day only. If you want to check these guys out. And then here's the coupon code to get the 40% off. I actually think they're elite e-waivers. Eric does about 40,000 4,000 charts a week. So they're definitely the hardest working technicians I know on the Twitter world. They cover, I don't know how many instruments. Anyway, that's Elliott Wave forecast, and it's for today only 40% off the first month. So how's everyone doing? Everyone enjoy Daniel? We have Lane Mendelsohn coming up here in about a half an hour. Lane is with TraderTech.com. He's going to be demoing some of his software that for traders that want to get some predictive analysis. That's what his software does. So we'll be talking to Lane in about a half an hour. How you doing, Tosin? Okay, so Alien's taking the trial. Alien doesn't spend money. Alien's motto is, if it's free, it's me. Right, buddy? If it's free, it's me. So, veteran Snaga, how are you? Cyric BW, you're a new handle. Welcome, BW. And I'm going to take a quick break. I'll be back in 5. Hello, Izzy. Pipper's in the house. Jordy. Ed Z. Is This Live is in the house. Yeah, a lot of errors. Robert Roop, welcome. Deep Vista's back. Hi, Ricardo, Pegasus. I'll be back in 5. I'll be back in 5. So I'll be taking a quick break, Mauricio. In a few minutes, everyone. You could continue to go ahead and share your work. Stand by for Lane Mendelsohn. Everyone doing okay? I'm back. Everyone doing okay? Wow. Gold is flying. Okay, everyone. Everyone doing okay? So people are going to take a break in front of the Fed. What do you got, Khalid? What's going on? It's the yen. Oh, it's the Dow. Yeah, I'm trying it up here. I'm trying it. Thank you, D. Kadick, for your Dow look. I put half on. Everyone thank D. Kadick for his Dow look. Any other thoughts going into the Fed today? Jordy, how about you? I don't know. We'll find out. We'll find out, Sir Goldie. Everyone doing okay? Who else is in the house here today? I'll say hello to everyone again. Hello, Tosin, Veteran Planet. How are you, buddy? Ryan, welcome to our community. Ron is here. BW, welcome. Forex Stop Hunter, keep up the good work. Goldie, do you still have use less leverage haunting you in your brain? Izzy, how are you doing? Jax, Ricardo, Pipper, Fame, hi Fame. Ziggy, Shorty, Carlos, Sonny, Malcolm, Ed ZFX, DJ, Sinatra, Mauricio, D. Bista, Doug, Robert Root, welcome Robert, JM, D. Kadick, Pegasus, JM. Everyone doing okay? Yes, this is live. Everyone doing okay? You're welcome, Malcolm. Here comes Canada. Nice pop in gold. Aussie's trying to hold. Nice to meet you, BW. You're well fed. Oh, you heard me munching on my piece of toast? Here's Ricardo's S&P. I think you tweeted this one. Yeah. Nice look. Looks like it could end up being a descending triangle. 1980 will give you like 1860. Descending triangle. If we got a flat line. Thank you, Rick. Nice look. Good place to recommit after covering your shorts under 2,000, don't you think? Don't you think? We covered the S&P 60 handles ago. You're short from 40. Now back above it. Okay. Still looking for another push up in CAD. Up towards above 140, huh? Okay. I didn't mean to do that. $140. Thank you, Rick. Still some upside according to Rick's view on USD CAD. 1776, how have you been? Everyone doing okay? Stand by for Lane Mendelsohn. Lane will be with us in around 10-15 minutes. Let's look. There's a Renko look on cable. I believe it's some type of Renko. Looking for 45. Nice trade. Congratulations, Planet. Planet's been short the pound from 51.30. I think that was up around the three drive zone up here. The 3 drive zone. Yeah, right up here. You're the man, Planet. We talked about it here last Friday. Who remembers the top tick? We were bouncing up against this line Friday. I talked about 3 drives to a top right up here. So it was a pretty nice trade. You could have waited till Sunday night to get on it. Planet's there, so I'm making Planet the man. You're the man, Planet. Congratulations. Congrats, Planet. That was a nice shot, Planet. I remember it. I thought the Swiss was going to make one more high. You stayed with it. Beautiful work, Goldie. So Goldie was there for the top of the Swiss. Did you ride it all the way down, buddy? Did you ride it all the way down? Thank you, Goldie. Congratulations, Goldie. Yeah, Goldie was there in Canada and the Swiss. And the Swiss was a home run ball. No wonder you haven't been around lately. You've been out spending all your profits, been out enjoying the money you made being short Swiss. Everyone congratulate Goldie. That happened at the highs in the dollar when the dollar was over par. It was a very nice trade. Everyone doing okay? Who loves LAR? Anyone in here? Monir, how come you only type your name? I'm just curious. Monir always says Monir. If you love LAR, give me a Y. Okay, still a great trade. Congratulations. So Lane Mendelsohn should be with us shortly. Stand by for Lane. You've been out doing your Christmas shopping with your Swiss profits. You're looking for 120? That's a big objective from here. Don't fade Planet. Planet's a big bear in Euro Yen. Looking for 120. Thank you, Planet. Everyone thank Planet for his macro look on Euro Yen. Thanks for the share, Planet. Nice macro view on Euro Yen. I'd like to see one more push up in Euro Yen, complete up there. Oh my God, the Wisconsin Dells. I used to go there as a kid. Where do you live? Are you from Chicago or something, Goldie? That was a monthly? Okay. I went there quite a few times. Okay, Monir. So Lara's helping you out? Are you trading? If you like what Lara's doing for you, establish an account with FX Pro. They're Lara's sponsor, Monir. Okay, I'm glad this is a tool for you. Hope it's working. Stand by for Lane Mendelsohn. Anyone else do what Monir does? You develop yourself using LAR. Okay. So I was born on the south side. I grew up in Skokie. I went to Northern Illinois University, and I learned the business on the floor of the old CME, which was above Union Station in the mid-70s. Yeah, southern suburbs or northern suburbs? What suburb? Did you ever have a seat? Did you ever trade at the exchange? Great looks by you, Planet. Great looks. Okay, put on your armor. As Ali says, it's a jungle. It's just a jungle. Oh, okay. You're young. Yeah, too late. So you miss those days. Don't rub it in that you're only 26. Libertyville, I know it. I worked construction there in college. They were building condominiums. That's true. You can't. No, you can't be a U.S. resident. So I know Libertyville. I had to hitchhike home from there because I fell asleep on the job and my foreman caught me. That was the end of my construction career as a laborer, and knew I better find a way to use my brain to make a living after that. It was a good experience. It happened in, oh no, it wasn't Libertyville. I'm sorry. It was Naperville. Naperville. So everyone doing okay? We should have our second guest here. I've seen the software before that Lane Mendelsohn's going to show. I forgot her name, that she was here once and showed the software. Let me look for her name. It's Julie Saltzman. Julie Saltzman showed this software before. So stand by for Lane. He should be here. Not for another few hours. S&Ps are fading a little bit. Euro yen kind of dead in the water. A lot of markets have really quieted down now. Everyone waiting on the same event. The Fed, the Schmed. Everyone waiting for the Schmed. Got the Shemitah and the Fed. Okay. 1:30 Central. Yeah. Lane should be with us in a minute. Stand by for Lane Mendelsohn at www.tradertech.com coming up. That's your subjective view. I prefer to call it the eye of the hurricane. We're in the eye of the hurricane. Get ready to come out to the outer wall. We're in the eye of the hurricane. We're going to react to the reaction. No one should get buried. How are you doing, Robert Root, Doug, JM, Peg, Ziggy, Shorty? How are you? Hope you're enjoying your time here with us. DJ, you too. Hi, Luimo. How are you, brother? Semi-log, welcome back. D Bista, welcome back. Ed Z, FX. Izzy, my mentee. BW, welcome to LAR. Everyone welcome BW. About a LAR welcome for BW. We're in the eye of the hurricane. Hurricane scheduled to be here in a little over 3 hours. 3 hours till landfall. 3 hours till landfall, batten down the hatches. Make sure your ships are moored securely. The hurricane will hit in 3 hours and 14 minutes.
All right. Oh wait, oh, you need that.
Hi, Lane. How you doing, Lane? Can you hear me?
Hang on one second, Dale.
I could hear you, buddy.
Grab Harry for me.
Can you hear me now? Okay, you want to go with that? Either way is fine, Lane.
I gotta figure out how to make it come out of my webcam, not there. It's coming out of my computer.
Okay. You
Hang
don't
on one
want
second, Dale. Hang on one second for me.
You don't have to use the webcam if you don't want to. We got a picture of you. We see how handsome you are, buddy. You let me know when you're ready.
Jason, I'm trying to do a conference call, but the sound is coming out of my computer. I need to come out on speakers right there.
Nice.
So I think it's maybe just reassigning the default.
Everything's hooked up.
Yeah. So I need the speaker.
It's actually fine initially.
Coming from my webcam. So I want to use this speaker and this mic.
Okay, while Lane's getting ready, use less leverage when you trade the markets. Use water stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. Okay, he unmuted you. He muted you.
What else is the microphone?
Now I can hear him.
So this is the mic. Is it all in one?
Dale, can you hear me?
Yes, I can hear you, Lane.
Okay, I'm just having an audio issue, so if you can just bear with me for a second.
Okay, you can't hear me? Is that the audio issue?
But the speaker's not.
Or it's too low? Oh, I see. Okay. Okay. Thank you, Wingman. Type in the chat when you're ready, Lane. Okay, guys, so the markets are pretty quiet going into the Fed while we're waiting for Lane. Let's take a look at what we're mainly watching paint dry right now. We'll wait for Lane to get ready. You can see the yen is confined to like a 10 pip range. We have two drives in the pound here. Momentum's pretty weak, but we do have two drives here in the pound. So watch this down here. We get down here in the pound, 49.5. Euro looks weaker to me. Gold's having a good day in front of the Fed. Might be smelling that they're not going to do anything. Are you ready, Lane? Gold pulling back a little bit. WTI. You ready? Unmute him, please.
Dale, can
Hi,
you hear
Lane.
me?
How are you?
I'm great. How about yourself?
Good. Nice to meet you, Lane.
Nice to meet you
I
as
was
well.
reading-
Sorry for the
reading a
technical delay.
No problem. That's showbiz. So,
Yeah.
I was reading a little bit of your bio, and it's interesting. I usually start off with asking people who they blame for them being in this industry. And you had, you had, genetically, you ended up being in this industry. Your father was a great influence on you. Why don't you tell us a little bit about your dad and how you went to all these investigating the trading industry with him and watching over his shoulder as he developed this software that you currently use. And he was a pioneer in the trading software industry. So why don't we start there?
Yeah, well, in terms of who to blame, yeah, I've got one main target that I can blame. It's my dad. But, no, it's actually it's been a blessing in so many ways. Well, first of all, a lot of kids and their parents, maybe they have stuff in common when they're younger. Then they go off to school and they start to become influenced by their friends, and they go in all different directions. For me, I started working with my dad when I was 6 years old, and when I tell people that, a lot of people laugh, like, yeah, what's a 6-year-old do? But you know what? A 6-year-old can clean toilets really well. A 6-year-old can take the trash out really well. So my official title was facilities manager, which is a glorified.
You were the janitor. You were the janitor.
That's
Okay.
it. I was the janitor. But you know what? I was a darn good janitor. And
Your dad believed. Okay, great. So you weren't. He didn't silver spoon you. He made you start at the bottom.
yeah, very bottom, which is fine. But the funny thing is that even going into the office, because at the time the company was very small. We have a ranch just outside of Tampa, Florida, and the office was actually located on the property. And so what would happen is I'd go into the office during work hours. I'd clean the toilets, take the trash out, but kind of through osmosis, I was learning. I was hearing conversations that were happening with the programmers. I was hearing conversations with the customers. And it was kind of like a brainwashing thing that was happening behind the scenes, I guess. Everyone knew but me. And I just really enjoyed it. People say they got bit by the bug. I really got bit by the bug without even realizing it. And then I kind of moved up the ladder from facilities manager to formatting floppy disks, because back in the day we were sending out software on 5 1/4-inch floppy disks, and you couldn't buy disks that were already formatted. Each one had to be individually and manually formatted, and that was my job.
So did you have an itchy trigger finger and wanted to put on your first trade at an age where most kids were only interested in what they were going to get for their bar mitzvah, or when they were going to get their driver's license? How old were you when you did your first trade?
I remember very distinctly my dad and I, when I was about 11, 12 years old, opening an IRA account. And I didn't really know much about it at the time, but he said, look, a lot of people, they don't think about this stuff until they're older. And you've been working, you've been earning wages, not much. I was getting, 5 cents a disc for every disc I formatted. But he said, look, we're going to get you set up with an IRA account, and as you make money each year, you're going to be able to put money away. And he explained how it's, tax deferred and how all that works. And my dad did all the right things in terms of instilling those values and work ethic and saving and learning new things. And I really enjoyed that. I really appreciated that. And so it was a really easy decision for me. I started programming our first website in 1995, so I really got excited by the internet. And then through high school, I was only going to school half a day, and I was going to work the other half a day. So it was really neat because I went and took the required courses. I took some night classes, some summer school, just to get all the credits I needed so I could afford to take the time off from high school. And so it really started working almost full-time through high school. And then my mom said, after I graduated high school, she goes, my mom and dad are, each have several college degrees. My dad's got an MBA, and he's got an MS degree. I mean, he's just very well-educated people. And I said, look, I don't have any interest in going to college. I know what I want to do. I know what my passion is, and I've been honing and developing my skills to do that. And my mom said, look, you got to go take a class. So I signed up for a night class, a psychology course, and I just couldn't do it. It wasn't my passion, and I wasn't excited by it. And so I learned that if there's something that I'm passionate about, man, I can do it. I can do anything I'm passionate about, but it's really hard to get behind something that you don't believe in or you're not excited about. And that became clear to me then.
Love what you do, and the money will follow. Chase the money, and it might be elusive. So, so tell me about how you're carrying on the tradition. Your website is tradertech.com. I've noticed the software that you guys market. In fact, I believe when I had Julie Saltzman on, she was showing your software. It has a predictive quality to it. So tell me about the evolution of this software. How many upgrades have there been over the years?
Yeah, okay, well, let me back up. In 1983, my dad came out with the first software program in the world that worked on a personal computer that was able to perform backtesting and historical simulations so that you could test a trading idea or create a trading system and see how it would perform by looking backwards and get some insight into how it might work going forward. So in 1983, he came out with that. It was called Profit Taker. Wildly successful. I mean, it just really disrupted the whole industry, which was in its very primitive state to begin with. Before that, it was just some basic charting software, and people were using calculators and graph paper. Well, now you had software that could allow you to test ideas, and it was a very sophisticated software at the time. Even today, it's more sophisticated than other software programs are, 30 some odd years later. But in the mid-1980s, my dad really started to really latch onto the idea of the fact that the markets were becoming more global. He wrote a lot of articles in the 80s where he said, it's becoming a global economy. It's becoming a one-world market, he said. And so as a trader and as a technical analyst, he became disillusioned to some degree with his own software because it was only doing single market analysis. Profit Taker looked at soybeans, or it looked at a currency market, or it looked at a particular precious metal. But what it didn't do is it didn't analyze the impacts and the influences that other markets could have on the target market that one would want to trade. So around the mid-1980s, he started really investigating the concept of inter-market analysis. And in 1987, when we saw what happened with the stock market crash and how it's just literally swept across the world, that was just a nail in the coffin. That's where he said, all right, this whole idea that I've been thinking about, in terms of markets being interrelated and how they can impact each other, he's like, okay, it's for sure. It's not just a hypothesis. It's definite. It's for sure. It's a fact. And so in 1988, he came out with a primitive version of Vantage Point that was just doing some correlational analysis. Not real sophisticated, but in his mind, but much more sophisticated compared to everything else out there. But in 1991, that's when Vantage Point came out, and we started marketing the Vantage Point software, making it available to individual traders and investors. We did it for the Swiss franc at the time, the Deutschmark, the 30-year T-bonds, and the S&P 500. There was no E-mini at the time. And what it was actually doing, Dale, is if someone was trading, let's say, T-bonds, the software was looking at 9 other markets. 9 other markets that have been statistically proven to have an impact on T-bonds, for example. And that was the beginning of taking this concept of intermarket analysis, not just looking at, let's say, 2 charts side by side, but really doing in-depth analysis, looking at the open, the high, the low, the close, volume, open interest, all of these individual pieces of data, and using mathematics, artificial intelligence, neural networks to sift through all of that data to then come to a decision of, okay, based on everything that's happening around the world in these related markets, where are T-bonds going to go? Short term, over the next 24, 48, 36, just the next couple of days.
So really, you guys were, before it became a popular word, Lane, you were developing your own algo.
Yeah. It's now you put on the news, everyone's talking about the global economy. I mean, literally everybody talks about that. But at the time, back in the late 80s and the early 90s, my dad was very heavy into intermarket analysis. John Murphy, who's a friend of the family's, he was very much into it and had written a book on it. And John Murphy wrote in the book, he said, what Lou has done is he's taken the concept of intermarket analysis, which, traditionally was done by looking at 2 charts side by side, very, very primitive, and computerized it, mechanized it. It made it more intelligent, which allows you to then make better trading decisions because you're considering the big picture. So in other words, the more information you have, as long as it doesn't overwhelm you and as long as it's accurate, the better a decision you'll be able to make. That's the whole concept.
Kind of a holistic approach to trading an individual instrument.
Yeah, you think of it this way, Dale. It's like taking the blinders off. So if you are, those horses like in New York City, they've got the blinders on. That's because they don't want the horses to get distracted. They don't want them to get spooked. They want them just focus on walking straight ahead. Well, that's great unless there's something that's sneaking up behind you, something that's coming from the left, something that's coming at the right. Then you're totally oblivious to those other factors. And so what we've done is we've essentially taken the blinders off for traders so they can see the big picture, they can see what's really happening beneath the surface, and that allows them to make better trading decisions. Maybe some of those decisions may be, I'm not going to take this trade at all because the trend is going to go sideways or it's going to be, just choppy. Okay, that's a good decision. Stay out. Another decision may be, get in. Whatever the case is, you're able to make a better decision.
How about on big red days like a potential interest rate hike for the first time in 9 years? How does the program adapt to a situation like that? To me, it's a, maybe just have a toe in the water type of trade, but I'd rather react to the reaction than predict the reaction.
Yeah, each person's different. The nice thing about our software is it's not a trading system, so it's not something you just follow blindly and buy because it says buy and sell because it says sell. The idea and what we're really doing is we're providing people with information, and when you combine accurate, consistent information with common sense, I think that's really the winning combination. So, for example, let's say there's a fundamental report coming out. We know when they're going to come out. They're always, pre-scheduled, pre-announced. Well, then you have to just look at it and say, what's my risk propensity? Am I in a trade? Do I maybe want to tighten up on my stops? Am I not in a trade? Maybe I want to just kind of wait, let the dust settle, see what happens. Those are individual decisions that each person can make. So while the software can't analyze those types of those impacts, what's really interesting is that even when there are fundamental events that happen, a lot of times the software is actually on the right side of the market because it's not just looking at that one market, because it is looking at interest rates as a whole. It is looking at currencies. It is looking at precious metals and markets around the world. So a lot of people trade Apple. So if our software is forecasting the price of Apple, it's looking now, today, as opposed to back in the early 90s, instead of looking at 9 related markets, the software is looking at over 30 markets that can drive and impact the price of Apple.
Wow. They say a picture speaks 1,000 words. You know how to screen share here on Hangout, and maybe we could look at your screen and take a look at the software. You go up to the upper left-hand corner, and if you scroll there, you'll see a green box. I think you're doing it.
All right. Cool.
Yeah,
I got
it. Okay. All right, beautiful. Okay, so we're looking at the software here on the euro, and why don't you explain it? My guess is that the last candle on the right is predictive.
Yeah. Even before I do that, let me show you something really interesting. Over on the left-hand side of the screen, I'm going to right-click on the properties for the euro-US dollar.
Okay.
This is the secret sauce here. Okay, so this is really important because anyone can draw lines on a chart. It's what's behind those lines.
You're making me hungry.
Okay, good. Hey, this gets me excited too. This is the thing that really gets me going because it's what's under the hood that's exciting. The chart, the lines, the blue, the black, yeah, that's all fine and dandy. It's what they represent. It's the culmination. But here's what's actually happening under the hood. What we're actually doing is we're forecasting for the euro-US dollar. But what you can see is that there are about 30 different markets here. Now, some of these are ETFs. These are ETFs. Here are other Forex pairs, both majors and cross pairs. You've got some currency futures. You've got energies like the light sweet crude, natural gas. You've got indices, the Dow, the E-mini. Here's interest rates, 10-year T-note. You even got some other markets that you think, well, gosh, I don't even know how. Why would lean hogs be considered? Gold. Rockwell Automation, these are individual stocks in the healthcare sector, conglomerates, technology, transportation. There are
so everything on the left-hand side in that box are inputs into the predictive nature of what the euro might do.
Exactly. So what we're doing for each one of those markets, we're looking at the open, the high, the low, the close, volume if it's a stock or a commodity, open interest if it's a commodity or futures market. So there are literally hundreds of data points that are being considered. This is where the artificial intelligence comes in. The neural networks look at all that data, which as a human we wouldn't know what to do with it, and it looks for these hidden patterns and these relationships, and it says, based on what's happening in all of these other markets, what's that going to do to the price of the euro? How is that going to push the euro either up, down, or sideways, and to what degree? And that's now what we're looking at in the software. So I'll give you a quick interpretation. It's actually pretty simple. I've got a 5-year-old daughter and a 2.5-year-old daughter. My 5-year-old, when she was about 3 years old, she would say, I want to play Vantage Point. I want to play Vantage Point. She thinks it's a game. Yeah. Because, and I told her, well, it is, and I'm trying to do what my dad did with me. Can I get her interested in it early? But I told her, when you see that blue line crossing above the black line, tells you the trend is expected to go up. It may or it may not. Chances are it will. It's up to 86% accurate. When the blue line crosses below the black line, chances are the market's going to trend down. Doesn't always happen, but if you've got 86% odds in your favor, I'd say that's pretty
your hit rate? Is that your hit rate across all instruments, 86%?
Yeah, we've got some that are higher, some that are lower. We have nothing that's below 70%. Everything that we forecast for, and we don't forecast for everything in the world. We forecast for a couple thousand symbols, though. Everything is at least 70%. The average is in the 80s, and we even have some that are higher than 86. So, but that's the average that we fall into over consistent periods of time, over years, not just like this week or last week. But we've had PhDs in mathematics and computer scientists and even professional traders who have gone and independently audited the accuracy and have confirmed and verified that it really is that accurate. And so here's what happens, Dale, is this blue line is created after all of the intermarket analysis is done. All of those other markets are considered and analyzed. The blue line is not your typical moving average. The blue line is a predictive moving average. This is something that we've patented. So we have 2 patents. One of the patents is on the way that we select those intermarkets, those 30 markets that I showed you, that relate to the target market, in this case the euro. And the second patent that we hold is on how we're able to take a traditional technical indicator like a moving average and actually predict it into the future. And you may ask, well, why would you want to predict the moving average? Well, by predicting the moving average, in many cases you eliminate or at least reduce the lag effect. That's the big criticism of moving averages, right? They lag the market. So if you can predict it, you've now reduced the lag, in some cases eliminated it, and that allows you to catch those turning points, those trend changes, at the time that they're about to happen versus finding out about it several days too late, after the train's left the station. So this blue line is the predicted moving average, the black line is an actual moving average, and you're just looking for those intersections. And so if you look at the far left of my screen, when the blue line crossed below, that was the software's indication that the trend would go down, and you can see, the trend went down nicely. When the blue line then crossed above the black line, that was the indication that that downtrend was over, and a new trend was developing, this time to the upside. And you can see there was a really big day. It looks like it was December.
That was Draghi, the ECB, that green candle there.
Yep, right there. So that was December 3rd. And again, the software couldn't have predicted that it would have been such a huge day that day. But as I said earlier, oftentimes the software is going to have you on the right side. You can see that a couple days before that is when the software first indicated the trend to start going up. So the beautiful thing is that you've got these two different things both working in your favor. You're analyzing the euro from a global perspective. You're not just looking at data on the euro. And you've actually got a leading indicator that can give you advance warning of these trend changes so that you can position yourself properly to profit from them.
How would you have handled this particular green candle when your predictive moving average moved up, got you long the day before the big green candle? We took out the previous day's low before the reversal. Would that have stopped you out, and then you had to recommit once we got back inside of that channel?
Possibly. I'm sure that it could have stopped some people out, probably with a pretty nice profit, but it depends on how tight or how wide you set your stops. Again, it's not a trading system, so it doesn't dictate to you, you must put your stop here, or you must put your stop there, which was by design. My father could have very easily developed this into a system. The problem with systems, in my opinion and my dad's opinion, is that it's not a one-size-fits-all. If your account size is $5,000 versus someone who's got a $500,000 account, I would venture to say that they're going to make different decisions about where they place their stops and how they place their stops. So what we're doing here is we're saying the trend direction is going to be up over the next several days. So you're immediately thinking, okay, I need to make sure I'm in a long position so I can capitalize on this. Then what the software does is it also gives you what the next day's trading range is expected to be, and that's what you use to set your stop. So remember earlier you said that the candle on the far right is a predictive candle?
Yeah,
you're absolutely right. So what that is that's today's predicted trading range. So every day, not only does the software tell you the direction is expected to be up or down, and to what degree, either up a little bit or up a lot, down a little bit, down a lot, but it also says, and here's the range that the market is likely to stay within. It's not always right. It's not going to be 100% accurate, but typically the market's going to stay pretty close to that range. So if you're in a long position, what you want to do is you want to look at that predicted low for the day and set your stop below that. You want to give the market some room to breathe. On the flip side, if you're in a short position, you look at that predicted high and you set your stop above that. Again, give the market some breathing room. And that's how a lot of our customers will use that if they're swing trading. We have customers who day trade as well. And so what they do for the day trades is they're looking at the predicted high and low as possible entry or exit points for the day, combining that with the predicted trend direction for the day.
Okay, can they break it down to different time frames?
Everything is done on daily bars, and everything is on an end-of-day basis. And we've thought about doing something maybe on an intraday basis, but the feedback we've gotten from a lot of our customers is they don't want to be chained to the computer. They want that freedom. If they can come and spend 10 minutes each night looking at this chart to determine, should I get in, should I get out, should I just stay in the position I'm in, they want low maintenance, minimal effort, and that's how we've designed it. You can see the software is very clean, very intuitive, and not very time consuming, and all of that takes a lot of work. It's easy to make something that's really complicated and hard to use. It is very difficult to make something that's very complicated easy to use, and that's what we've really been focused on, is how can we give people the most accurate and consistent information and do it in a way that it's intuitive, easy, and not time consuming for them.
So you have a Forrest Gump tool. Do you train people to use this? Do you have training?
Oh yeah, we do offer training. Some of the people take us up on the training. Maybe they're new to trading in general, and they need some, some feedback or some guidance as to, what does this mean? What does that mean? How does this work? But anyone who gets the software, I'd say within, I don't know, a couple days to a week, working with their relationship account manager. Everyone gets a relationship account manager when they get the software. It's in our best interest to make sure that every customer that gets the software knows how to use it and is successful with it, because we have a lot of customers who might trade stocks and also want to get into Forex, or who trade Forex but might want to get into futures. We have software that covers all of those areas. Most often, somebody will start in a particular area, let's say like stocks, make money with the software, really get comfortable with it, and say, I've done really well with the software. I understand it. I'm making money. My account has grown. My confidence has grown. Tell me, how does it work with Forex? How does it work with futures? And so, we've just learned over the years that if we can do everything in our power to ensure our customers are successful, they're going to come back. They're going to buy more software from us, and that allows us to continue to fuel our research and development efforts, because we have a R&D team. We've got some really smart guys on the team. It's a very expensive research and development effort that we're constantly engaged in. But what's nice is that as we make new developments, as the software becomes more accurate, as the software becomes easier to use, as market conditions change and the software is adjusted to account for those changes in the markets, we make upgrades available to our customers, and it's very minimal cost. It could be very inexpensive. But you say, well, if my accuracy just went up 3%, 4%, 5%, gosh, I'd give any amount of money for that. So it's just nice because as new customers come on board, that fuels our research and development effort, and then we come out with upgrades and enhancements to the software.
Well, I want to thank you so much, Lane, for joining us today and talking about generational development of your software. What's your most precious currency?
Well, I think the Euro-US dollar is the one that most people focus on. I have another chart I'll show you real fast.
Because my most precious currency is time.
Oh,
and that's why
well,
I was gonna thank you for spending some of your most precious currency with us. If you want to go ahead and show the euro, go ahead.
I always think about time as my most precious commodity. So it's just a semantic.
Okay.
It is. Certain commodities, they can make more of it. Others, there's a finite amount, and time is one of them.
Yeah, money comes and goes. Time is gone forever.
That's it. Can't get it back. This is a chart of the Euro-US dollar. This goes back to March of this year. So this is a 9-month time frame. And what I'm showing you here is this is the predicted highs and lows I was mentioning earlier. So this shows you, we were talking about how would you place your stops. If you look at the far right of the chart, you can see that big candle. I'll move my cursor over. It's right here, that green candle. And you'll see that it broke below that predicted low. And so that's where you're going to use these predicted highs and lows to set your stops. Didn't go too far below it, so it depends on how much buffer you gave it. But over a 9-month period, you can see typically market's going to stay within that trading range. And so it's a very effective tool for setting stops and entry and exit points. It's one that, like I said, it's accurate enough that people can day trade with it.
All right, so you place your buy stops above the red and your sell stops beneath the black line.
There you go. See, you're learning already. That's how easy it is.
I could probably qualify to be a relationship manager.
Well, let's see. You seem like a nice person. You seem like you want to help people be successful. Yeah, I guess you have qualifications.
I'm pretty busy. So I want to thank you, Lane. When I first saw the software, I was impressed. I wanted to give you a chance to show it. Perhaps you want to show your website. I know that people could follow you on the Twitter handle @MarketTech, and your website is www.tradertech.com.
Yep, that's right. It's tradertech.com. And if anybody wants to get a free live demo or a free market forecast, all they have to do is they go to the website, tradertech.com, or they can just give us a call. I'll give you 2 numbers. If you're calling from overseas, we have customers in over 120 countries around the world. You'll want to call 813-973-0496. Just say you want to get a live demo or a free market forecast, and we'll provide that to you. If you're calling from the U.S. or Canada, you can dial 800-732-4700. 5407, and we'll be glad to show you what we've got. We're very passionate about it. We love helping people. We've helped thousands of people around the world, and it's what gets us up in the morning. It's why my dad started the company, and that's what's driven me to want to take things to the next level.
I wish you and your family and your employees and all your customers a successful, happy, Merry Christmas, and great New Year, Lane.
Thanks, Dan. Same to you. Appreciate it. Have a great day.
Thank you, man. That's
Bye-bye.
Lane Mendelsohn. Everybody, website tradertech.com, Twitter handle @MarketTech. You guys enjoy it? Interesting software. So I noticed the S&Ps are giving up something here. Not much. VIX is still down. Gold's up. So we'll see, huh? Crude down. Everyone doing okay? Everyone doing all right? Gold's still acting good. Euro's trying to hold. Pound's trying to diverge. Yen looks like it wants to roll over. CAD is headed up towards my 38.50 third drive line. So remember, everyone, we're going to be covering the Fed Live. Mauricio, who's going to be on the team to cover the Fed Live, I believe Val and you and me, anyone else joining us for the Fed today? Yohei will be with us. Okay, Marathon Man will be there. So everyone, I'll see everyone later. So I look forward to there's a recording. Just a quick wrap up for everyone. I'd like to buy stiff breaks down around the 108 to 107.50 level if the dollar rallies. The yen may be up around 22.5. CAD's trying to blow out the divergence. It's a leave alone for me. I still think the guppy is very vulnerable. Every rally fails. I'm looking for 181, 180 like Ricardo. I thought we'd get one more decline in Aussie to the 70-80 level. I still think that we could get down to this wedge line if the dollar rallies around 70-80. And those are my calls. I want to thank everyone individually for their charts that they shared today. It's great to have Mauricio back with us from Japan. Thank you, Maury, Sinatra, Goldie, Semi, Fame, Yellenization, welcome to LAR. Vedran, Pipper, Forex Stop Hunter, Carlos, Sonny, Ricardo, D. Kadick, Izzy, Malcolm, Tolson, Ryan, Ron, Jax, Ziggy, Shorty, Ed Z, DJ, D. Bista. See you in a bit. D. Bista, Doug, Robert Roop, welcome to LAR. JM, Pegasus, Luimo, Planet gave us some nice looks today. Fab, and I Still. So I'll see everyone in 2.5 hours. Remember, keep some powder dry so we could react to the reaction rather than trying to predict it. And also remember, don't just count your pips, count your blessings. And I'll see everyone in an hour and a half. Thank you, everyone, for your attention and contributions. Adios.